Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. All right, sorry for no webcast yesterday. I was traveling back in beautiful 40-something degree New Jersey today. So let's talk about our rectangle, all right? And we discussed it on Monday, testing the green line there, the daily mid-band, either as a function of time or as a function of price. We tested it as a function of time as we shedded the back end of these prices. The bears did a very good job yesterday doing two things. Continuing to seal off the 9-day, which had tried to be support. They messed around with it last week. Resistance on Friday, Monday, and yesterday. But yesterday, instead of bouncing between the 9-day and the 20-day and doing not a whole hell of a lot in the regular session, Monday's regular session was brutal. They break the 20, and now they're attempting to run with it. So you had 40.91, half was your low from yesterday. You actually have a marginal lower low today at 89.25. You can see the lower band here getting engaged, upper band, middle band, lower band. That's just how the E-mini likes to roll. It's done it. That's what it does. So the question now is, with all of this compression, and it is compression in that you're not seeing directional pricing, do we now see this lower band open up and see some directional pricing to the downside, and you be looking for a move down to where the 100-day exponential and the 200-day exponential are jammed up on the continuation chart here, call it, 40.30 to 40.38, something like that. Look, that's not a target. I don't do targets, okay? The only time I do target is when my kids freaking drag me there. Targets will do two things in trading. They will get you out of things that want to continue to work, or they will keep you in things that are not working. That's what targets do. Other than sending out idiot tweets, hoping that a target hits so you can show everybody how smart you are, in the actual function of trading, targets will cost you more money than they will make you, period. Hourly chart, you can see there, sealing it off, and at the weekly pivot. So see the weekly pivot, 41.62. Look, Monday was a dog to trade, but they did accomplish that, and they retested it right into the close, and it hasn't been back since. So you had a hard break of daily mid-band in the 10 o'clock hour here. They continued it down, little profit taking at the close, but now you got this marginal lower low. You've seen the hourly mid-band come down and try to seal everything off. It needs to continue to seal everything off today. Sitting around 41.07, you need it to stay underneath there now. So we had what? Trade balance, wholesale inventories, durable goods this morning. Today is Wednesday, all day. Friday, Thursday. I honestly haven't looked at this morning, if you can't fucking tell. All right, that's it. You got oil, who cares? Then there's some 2-year note, 5-year note auctions at 11:30 and 1 o'clock respectively. So the majority of the econ is out for today. Tomorrow, you got GDP, personal consumption, PCE, 8:30. That's gonna get your attention. And then PCE deflators, 8:30 on Friday, and then the whole Michigan thing. So you've got a little bit of econ that is going to have a chance to I don't think it'll really move the needle unless something really strange happens. But we're getting to the point now where, we've got earnings. But for the most part, during the day, this thing is kind of trading. It's trading in a little bit of a vacuum. You got some, Facebook is after the close today. So you have little things like that are coming up, and we'll see, what that wants to do. Amazon is Thursday. That's going to matter always. So we'll see where we are with that. But as far as actually trading price is concerned, which is what I bang the table on every day, hourly mid-band needs to hold. The bears need to The Bears have been incredibly uncomfortable below 4,100, just like the Bulls have been incredibly uncomfortable above 4,200. The bears are going to need to get comfortable below 4,100. They got to get down there and stay there. But you can see it. Below 4,100, nope, don't like that. Get me back above. Below 4,100, nope, don't like that. Get me back above. You bears, you better start living under there. You better start living there. If you can, then I think the next 50 or 60 to the down probably comes pretty easy once you seal it off. So I will be very curious to see what we are looking at in a couple of days, whether this just goes back to, because we can widen this out and we can talk about, you couldn't hold, you did 39.80, you couldn't hold 4,000, but you can draw a line, in the area of 4,100 and you can see, here, it doesn't like it. You need to start in here. You need to like it. You need to get below and stay there. That'll be a key to the week. All right, that's all I got. You got volume weighted average price 0.5 half, proprietary moving average 0.175, and then hourly mid 41.07. That's going to be big. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow.